Imagine like your investments are just averaging like a 66% return annually for over 30 years.
It's pretty crazy.
Sounds impossible,
Yeah,
right?
yeah,
Well,
totally.
that's the reality for investors in Jim Simons's hedge fund Renaissance Technologies.
Yeah, it's an incredible story, and that's what we're diving deep into today. So we're going to unpack how he and Renaissance Technologies achieved such groundbreaking success, and more importantly, what we can learn from their journey.
Yeah.
It's a story that really highlights the power of curiosity, unconventional thinking, and pushing the boundaries of what's possible.
So let's start with Jim Simons himself.
Okay.
This guy was practically born a math whiz. I mean, who ponders Zeno's paradox at 4 years old?
It's pretty amazing, this paradox, the idea that you can keep having the distance to a destination but never actually reach it, like captivated Simons at an incredibly young age.
Yeah, most 4-year-olds are figuring out how to build a tower out of blocks, not grappling with the nature of infinity.
Yeah, it definitely suggests an early inclination towards math and abstract concepts.
For sure.
And that fascination clearly didn't fade. He went on to crack codes for the NSA during the Cold War, even ones that had stumped intelligence agencies for years.
That's wild. It seems like those abstract mathematical skills had some pretty concrete, real-world applications after all.
Absolutely. It's a great example of how knowledge that might seem purely theoretical can actually be incredibly powerful when applied to the right problem.
So we've got code-breaking math whiz. How does that translate to revolutionizing Wall Street?
Well, after the NSA, Simon stayed in academia for a while, teaching math at MIT and Harvard. He was clearly brilliant, but he eventually decided to step outside the ivory tower and founded his own investment firm, MoneyMinds, in 1968.
So that was the seed that eventually grew into Renaissance Technologies.
You could say that initially, though, Simons wasn't using the quantitative analysis that would later make him famous. He was relying on more traditional investment strategies, following trends and making decisions based on gut feelings.
Got it.
But as we learned from the Cooper Academy video, he found this approach emotionally draining and inconsistent. He even described it as gut-wrenching.
That does not sound like the calm and calculated world of mathematics.
Right, and that's when the shift happened.
Okay.
Simon started to notice patterns and anomalies in the market that hinted at a more predictable, less emotionally driven approach.
This is where the quant king is born.
Yeah, in 1982, MoneyMinds became Renaissance Technologies, and Simon set out to build a hedge fund unlike any other. Instead of hiring Wall Street veterans, he sought out mathematicians, physicists, and data scientists.
Wait, so he completely ignored the traditional financial wisdom?
Yeah.
Why would he do that?
He believed that bringing in people from outside the world of finance would give them a fresh perspective, unburdened by the existing dogma of Wall Street. He wanted people who could look at the market through a different lens, using their analytical skills to uncover hidden patterns and opportunities.
It's like he was assembling this team of brilliant minds from different universes ready to crack the code of the market, just like he'd crack codes for the NSA.
That's a great analogy.
Yeah.
And the results speak for themselves. In 1988, they launched the Medallion Fund, which quickly became legendary for its mind-blowing returns. We're talking an average of 66% annually.
That's insane. 66%. What was their secret weapon?
Well, a lot of it is still shrouded in secrecy, but we do know that the Medallion Fund became exclusive to employees in 1993, and by 2015, all external investors were bought out.
Hold on. They basically told their investors, thanks but no thanks, we got this. What was behind that bold move?
It's unheard of in the financial world, and it suggests an incredible level of confidence in their strategies and maybe even a desire to keep their methods completely under wraps.
Okay, I'm dying to know what those strategies were. How did they use data to generate those incredible returns?
Well, one key strategy was what's called anomaly trading, which involves finding and exploiting those quirks in the market that everyone else seems to miss.
So they were deliberately looking for things that didn't make sense. Why would that be profitable?
Because most investors try to rationalize market movements, like to find a logical explanation.
Got it.
But Simons and his team weren't interested in the why. They just wanted to understand the what if they saw a pattern, they exploited it, regardless of whether it fit with conventional wisdom.
I think the Cooper Academy video had a great example of this, something about stock prices in Christmas.
Yes. They found that stock prices tend to rise in the days leading up to Christmas. Most investors would try to find a fundamental reason for this, but Simons didn't care.
Wow.
He just recognized the pattern and used it to his advantage.
So they would buy before the price went up, sell after Christmas, rake in the profits.
Exactly.
It's so simple, yet so brilliant.
We're surrounded by data, and often there are hidden patterns just waiting to be discovered.
Okay, anomaly trading is one piece of the puzzle. What else were they doing?
Another strategy was trend following, and this is how Simons found early success in the commodities market. They would identify trends and ride the wave buying when prices were going up and selling when they started to fall.
That seems fairly straightforward.
It is, but as the fund evolved, they moved beyond simple trend following to more sophisticated models involving what they called reversion predicting signals.
Reverse, what does that mean?
It's the idea that prices tend to revert back to a certain average over time. The Cooper Academy video used Apple stock price as an example. They found that the ratio between Apple's share price and its tangible book value, which is basically the value of its assets minus its liabilities, generally hovered around 43.
So what is tangible book value exactly?
It represents the net worth of a company's physical assets. Think of it like this. If you were to liquidate a company today, tangible book value is a rough estimate of what you'd be left with after selling off all the buildings, equipment, and inventory and paying off any debts.
Okay, that makes sense. So this ratio for Apple was always going back to 43, even if it fluctuated above or below that number sometime.
Exactly, and that predictability allowed Renaissance Technologies to profit. They'd buy when the ratio dipped below 43, anticipating it would rise again, and they'd sell when it climbed above 43, expecting it to fall back down.
It's amazing how these seemingly random price movements can actually have hidden patterns.
That's the key insight. By analyzing vast amounts of data, they could uncover these subtle patterns that most people wouldn't even notice.
We've covered anomaly trading and trend following, both pretty revolutionary for their time. But there's one more piece of the puzzle I want to get to. What about their use of machine learning and AI?
You're right, that's a crucial part of their story. Remember, this was the early 1980s when AI was still in its infancy. But Simons was way ahead of the curve. He started using machine learning in 1982, decades before it became mainstream in finance.
So he saw the potential of these technologies before almost anyone else.
He did. And that foresight allowed the Medallion Fund to test millions of hypotheses, find those subtle patterns we were talking about, and ultimately achieve those incredible returns. They even had a signal called déjà vu that helped them identify recurring patterns for profit.
That's just incredible.
It is. It really highlights the power of embracing new technologies and seeing their potential even when they're still in their early stages.
Okay, let's shift gears a bit. What was the culture like at Renaissance Technologies? From what I've gathered, it was pretty different from the typical Wall Street firm.
It was definitely unique. Simons fostered a culture of collaboration and intellectual freedom. He handpicked brilliant minds from all sorts of scientific fields and encouraged open communication and idea sharing.
He made everyone partners in the firm, giving them all a stake in its success. Why was that so important?
It created a truly collaborative environment where everyone felt valued and empowered to contribute their ideas. Instead of the cutthroat competition you often see in finance, Renaissance Technologies was all about collective problem solving.
It sounds more like a scientific research lab than a Wall Street hedge fund.
It was very much a place for exploration and experimentation. Simons brought together some of the brightest minds and gave them the freedom to push the boundaries of what was possible.
This all ties back to what we were talking about earlier with Simon's unique hiring strategy. By bringing in people from diverse fields and fostering a collaborative environment, he was able to tap into a collective intelligence that was far greater than the sum of its parts.
Exactly, and I think that's a powerful lesson for all of us, no matter what field we're in.
It seems like there's a lot we can learn from Jim Simons and Renaissance Technologies.
Yeah.
But before we go any further, I'm curious, what's the one thing that has stood out to you the most so far?
What fascinates me is how Simons, with his purely mathematical background, was able to disrupt an industry as established and seemingly impenetrable as finance. It makes you wonder what other seemingly unrelated skills or knowledge could be applied to unlock new possibilities in other fields.
That's a great point. I mean, if a mathematician can conquer Wall Street, what's stopping a musician from revolutionizing healthcare or an artist from disrupting the tech industry?
It's a really thought-provoking question.
Yeah.
And it's one that I hope our listeners will ponder as we continue our deep dive.
I'm ready to delve deeper into how they actually applied these strategies.
Let's do it. We'll explore some specific examples and touch on some of the controversies surrounding Renaissance Technologies. Let's look at a specific example
Okay.
of how Renaissance Technologies applied their strategies in the real world.
Okay.
The Number File 2 video goes into some detail about how they analyzed Apple's stock price.
Okay, yeah, remember that. Didn't they find some kind of pattern related to the company's, tangible book value?
You got it. Renaissance Technologies discovered that the ratio between Apple's share price on the stock market and this tangible book value tended to hover around 43.
Okay.
Sometimes it would go above, sometimes below, but it always seemed to come back to that average.
So they were able to predict with some degree of certainty that this ratio would revert back to 43 even if it strayed from that number temporarily.
Right.
How did they use that to their advantage?
That predictability is key.
Okay.
If the ratio dipped below 43, they would buy Apple stock, betting that the price would rise and the ratio would eventually go back up. Conversely, if it went above 43, they would short the stock, expecting the price to fall and the ratio to revert back down.
Shorting a stock, that sounds risky.
It is. Short selling essentially means borrowing shares of a stock, selling them at the current price, and then hoping to buy them back later at a lower price to return to the lender. You profit from the difference.
So they were playing both sides of the fluctuation, essentially.
Uh-huh.
Buying low, selling high, all based on this predictable pattern.
That's a simplified way to look at it. Of course, their actual models were far more complex, taking into account countless other variables. But this Apple example illustrates how they could leverage even seemingly small and subtle patterns in the market to generate profits.
It does make you realize how much data is out there just waiting to be analyzed and understood. Most of us just see like random fluctuations. But Renaissance Technologies saw opportunity.
They were definitely playing a different game than everyone else.
Yeah.
Their level of sophistication was unparalleled.
It certainly paid off for them, but their success wasn't without its critics. All those high fees they charged, the secrecy surrounding their methods, it almost seemed too good to be true, didn't it?
You're right, their phenomenal success attracted a fair amount of scrutiny. Some argued that their fees, which could be as high as 44% of profits, were excessive, even though investors were still earning impressive returns after those fees.
And there were questions about their tax practices, right?
Yes, there were investigations into whether Renaissance Technologies was using complex financial instruments to reduce their tax burden.
It's a reminder that even the most successful and innovative ventures can be subject to controversy, especially when dealing with such large sums of money. So on the one hand, we have this incredible story of innovation, of using math and data to achieve unprecedented success. On the other hand, we have these questions about the potential downsides, the concentration of wealth and the ethical considerations.
It's a complex and multifaceted story. It's what makes it so compelling.
What really strikes me is how Simons was able to build such an extraordinary team. He had this uncanny ability to identify and attract brilliant minds.
It's remarkable. Remember, he wasn't recruiting from the usual pool of Wall Street talent. He was reaching out to physicists, astronomers, signal processing experts, people from diverse scientific fields who shared a common thread, exceptional mathematical and analytical skills.
And he didn't treat them like employees. He treated them like partners.
Right.
Everyone had a vested interest in the fund's success.
He believed in giving smart people freedom and creating an environment where everyone could talk to everyone else. It was all about collaboration and collective brain power.
That's so different from the competitive dog-eat-dog culture that you often hear about on Wall Street.
But that's precisely what set Renaissance Technologies apart. They weren't hoarding information or trying to outmaneuver each other. They were sharing ideas and working together to solve complex problems.
So essentially, he created this kind of scientific think tank focused on cracking the code of the financial market.
That's a great way to put it.
Yeah.
And it worked incredibly well.
I'm curious, what was it like for these scientists and researchers to go from solving complex problems in their respective fields to trying to understand the stock market? Was it a difficult transition?
He attracted top researchers by presenting them with an intellectual challenge unlike any they'd encountered before.
Interesting.
He essentially said, come work with me and let's see if we can figure out how this whole market thing works.
Oh, it's the allure of the unknown, of tackling a completely new and complex problem.
Exactly. And I'm sure the potential financial rewards didn't hurt either, but it seems like the intellectual challenge was a major draw for these brilliant minds.
It's like they were drawn to a puzzle that they just couldn't resist solving.
That's a perfect analogy.
Did Simons ever express any concerns about the potential downsides of his approach? Like what if they became too powerful, or if their methods created too much inequality in the financial system?
He did acknowledge that there were limits to how much money their models could manage effectively. He explained that if they traded too much, they would start to distort the market, diminishing their returns. It's like trying to squeeze too much juice out of an orange. Eventually, you just get pulp.
So they had to be careful not to disrupt the very system they were profiting from.
Right. And I think that awareness speaks to a certain level of responsibility. They recognize the potential for their methods to have unintended consequences.
What about all the secrecy surrounding their algorithms? Did Simons ever feel conflicted about keeping their methods hidden?
In the Number File 2 interview, he argued that secrecy was essential to protecting their intellectual property. He felt that traditional methods like patenting or copywriting wouldn't work in this case because competitors could easily reverse engineer their algorithms.
So it was a matter of survival in the ultra-competitive world of finance.
It seems so. They believed that if they revealed their secrets, others would quickly copy them and their advantage would disappear.
Okay, I think we've covered a lot of ground here. We've seen the incredible innovation, the mind-blowing success, and also some of the controversies surrounding Renaissance technologies. But there's one more piece of the puzzle I want to explore before we wrap things up. We were talking about the ethical implications of Renaissance technology's success. Like the concentration of wealth, the high fees, the complex tax strategies. These are all important issues that we can't ignore.
You're absolutely right. As fascinating as their story is, we also have to consider the broader societal impact of their methods.
It's like we've been exploring this incredible machine, marveling at its ingenuity and efficiency. But now we have to step back and ask, what are the unintended consequences of this machine? Who benefits and who might be left behind?
Those are crucial questions, and I think they highlight a key takeaway for our listeners as we strive for success and innovation in our own lives. We need to be mindful of the potential impact, both positive and negative.
It's not just about achieving results. It's about achieving results in a way that is ethical, sustainable, and ultimately benefits society as a whole.
Exactly. And that's a message that resonates far beyond the world of finance. Whether we're scientists, artists, entrepreneurs, or simply trying to make a positive impact in our communities, we need to consider the broader consequences of our actions.
It's fascinating to think about the contrast between Simon's early work as a codebreaker for the NSA and his later work in finance.
Yeah.
Both involved cracking codes in a sense, but the goals and the stakes were so different.
It's a striking parallel. From protecting national security during the Cold War to generating extraordinary wealth on Wall Street, Simon's journey shows us how mathematical talent can be applied in vastly different ways, and it raises important questions about the choices we make and the impact those choices have on the world around us.
Okay, as we wrap up our deep dive into the enigma of Jim Simons and Renaissance technologies, what's the one big takeaway you hope our listeners walk away with?
I think the most important lesson is this. Data is everywhere, and it's incredibly powerful. But it's what we do with that data that truly matters. Simons and his team understood this better than almost anyone. They were able to extract meaningful insights from vast amounts of data, using those insights to make strategic decisions and achieve remarkable results.
Simons himself said in the Number File 2 interview that the most important mathematical skill in business is subtraction.
That's right. He was talking about the importance of understanding costs and ensuring that revenues exceed expenses. It's a fundamental principle of business, but it applies to so much more than just making money.
I think it's about understanding the underlying dynamics of any system, whether it's a financial market, a scientific experiment, or even our own personal lives.
It's about seeing the patterns, identifying the key variables, and making informed decisions based on evidence, not just intuition.
So data is king, but it's the ability to analyze and interpret that data that really makes the difference.
Absolutely, and that's where skills like critical thinking, problem solving, and the ability to connect seemingly disparate ideas become so crucial.
Another key takeaway from Simon's story is the power of teamwork and collaboration. He didn't achieve all of this on his own. He surrounded himself with brilliant minds from diverse backgrounds, creating a culture where everyone felt empowered to contribute.
That's right. He fostered a sense of intellectual freedom and encouraged open communication, recognizing that the best solutions often come from bringing together different perspectives and approaches.
And that's a valuable lesson for anyone, regardless of their field or aspirations. The more diverse the team, the richer the insights, and the greater the potential for breakthroughs. Before we sign off, I want to circle back to something we mentioned earlier, the fact that Jim Simons never took a finance class. He revolutionized Wall Street with a background purely in mathematics.
It's mind-boggling, isn't it? It really challenges our assumptions about what it takes to succeed in a particular field.
Yeah, it suggests that sometimes the most groundbreaking innovations come from unexpected places, from people who are willing to think differently, to challenge conventional wisdom, and to apply their knowledge and skills in unconventional ways.
And that brings us to our final thought for our listeners. What seemingly unrelated skills or knowledge could you apply to unlock new possibilities in your life, your career, or even the world around you?
That's a fantastic question. Maybe you're a musician with a knack for problem solving or an artist with a passion for technology.
Hmm.
Don't be afraid to explore those interests, to combine your passions in unexpected ways.
Yeah.
You never know what amazing things you might discover.
It's a question that could spark the next big innovation, the next groundbreaking discovery, or the next extraordinary success story.
And that, my friends, is the essence of this one. The deep dive, we take a collection of information, synthesize it, analyze it, and extract the most valuable insights, leaving you with more knowledge, more questions, and hopefully a renewed sense of curiosity about the world around us.
So keep exploring, keep learning, and keep diving deep until next time.